Venture capital, VC, is the financing of new business ideas by private individuals, companies, and institutions that aim to generate a return by investing in these ventures. In exchange for providing money, these investors receive equity in the company or companies they are backing. Venture capital is an essential financial tool for any startup company. Simply put, venture capitalists are risk-tolerant financiers who assist early-stage businesses, startups, push into high gear with their funding needs. However, venture capital can be a difficult field to break into as an aspiring entrepreneur without connections and experience. Fortunately, there are many ways to get your foot in the door as a future VC, so you can start making connections and getting experience that will benefit you down the road when the time comes to start searching for investment opportunities on your own. What is venture capital? Simply put, venture capitalists are risk-tolerant financiers who assist early-stage businesses, startups, push into high gear with their funding needs. However, venture capital can be a difficult field to break into as an aspiring entrepreneur without connections and experience. Fortunately, there are many ways to get your foot in the door as a future VC, so you can start making connections and getting experience that will benefit you down the road when the time comes to start searching for investment opportunities on your own. As part of this venture capital process, you'll need to learn what it takes to be a successful entrepreneur and investor. This article will provide you with an overview of venture capital and help you understand the steps you need to take to get your foot in the door as an investor. How to become a venture capitalist. Find a firm that invests in technology-based companies. Find a firm that invests in industries and markets that align with your interests and expertise. Invest in the firms you intend to partner with. Be persistent, but also respectful and professional. Be willing to learn from those who are more experienced than you. And most importantly, have fun with it. Now that you know what it takes to get started as an investor, you'll need to find a firm that invests in technology-based companies. Ideally, you'll have a good idea of the types of companies you're most interested in backing once you've identified a few firms you'd like to partner with. Finding and evaluating funding opportunities as an investor. When it comes to finding and evaluating funding opportunities, you'll need to build strong networks and relationships within the venture capital community. You'll also need to do your due diligence when it comes to researching investment opportunities. After all, there are a lot of bad deals out there, which is why you need to be extremely rigorous in your research so you can separate the good deals from the bad. Your research should include reading investment documents, interviewing the team and management, and visiting the company's headquarters. This will help you get better acquainted with the companies and learn more about the people behind them so you can get a better sense of whether or not it's a good fit for you and your firm. Once you've done your research and assessed each opportunity, you'll need to decide whether or not you're going to proceed with the investment. Understanding the role of venture capital. Venture capitalists are mostly interested in three things when investing in a company: the opportunity, the market opportunity the company is attempting to address, the management team, who are the people that will be running the company and making decisions, the valuation, how much the company is worth, and how much each share is worth in return for funding a company. Investors are typically granted an ownership stake in the company. This means that, in exchange for providing funding, venture capitalists expect a percentage of ownership in the company they invested in. This ownership stake is based on the company's valuation, which is based on certain factors, including how large a market opportunity the company is attempting to address, how well the product or service addresses that opportunity, how well the management team is executing on the opportunity, and how far along the company is in its development cycle. Conclusion. Venture capital is a unique field in which you need to have a unique set of skills and experience to succeed. This means that the process of finding funding for your business could be quite time-consuming, lengthy, and frustrating. It's important to remember that the journey of starting a business is not easy, and finding the funding required to see it to fruition can be challenging. But with a little patience and perseverance, it can be done.